So the topic we'll talk about is market orders versus pending orders. What are the differences and how do we set pending orders? So first thing is, let's take a look at the definition of these, or what the differences are, right? So market orders are the orders that we execute at real time. So this is the current price action, current price. So we click on the buy or the sell button, and whatever the price is in front of us on the screen is the price we'll get. With the market orders, there can be some slippage, so that there is this little time lag between when you clicked your button to when your trade got executed at the broker side. So that can create slippage. So even though, let's say, you entered your trade at 1.1950, but your order gets billed at 1.1954. So there was a slippage of the 4 pips there. And the slippage is worse when you have news. And that's another reason not to trade news right in the middle of it, because the spreads are big and the slippage can be a big as well. So even though your stop is at a certain level, the price can go 60 pips against you before they close you out, right? So they will make you take that loss. And again, so that goes back to not trading the news, but that's called the market order. The market order is whatever, not the price you see on the screen. Technically, market order is the price that your trade gets executed at, when they receive the order and when they fill the order. It's the fill price. So there is that little bit of a difference between, there can be a little bit of a difference between when you execute your order and when it actually gets placed, right, at the broker side. So that's the current price, or that's the market order. I think it was a little while ago, I'm not sure if your brokers were sending this information out, but my broker was sending out information saying, please be careful when entering market order because there can be slippage, yada, yada, yada. So they were talking about all this stuff, but that's what it means. That means the current price that the order will get placed at the broker side, not what we see on the screen. So that's the little bit of, the difference between the two. So market orders, I use a lot of market orders because it's just easy to click the button and place the trade. A lot of my trades are day trades, so I just put them in at the time and I will just let them run. So this is the easiest type of order to place. So what we're doing essentially is, if we go to our charts here, let's go to Euro here, for example. We go to our chart, we say, okay, I want to, let's say, sell this, right? So you'll click on your new order button, and you will see the difference here. So your volume here. So here is the price. So this is your bid and ask prices. So you can click on the sell and your order will be placed. So this is your market order, right? It says instant execution. When it says instant execution under type, that means market order. So that's market order. So all you have to do is just click on buy and sell, and you're in the trade and the price is in. There we go. So it will tell you when or at what price the market order was executed. Most of the time, what you see on your screen is the price that the order gets filled at. There isn't a lot of slippage, but from time to time, there can be slippage, and that's the downside of using market orders. Now, market orders are not very good if you are going to look at levels. So let's say you wanted to look at a certain level. So let's say you wanted to look for a pullback. This is what we do, right? We look for pullbacks into our daily pivots. So if you wanted to look at a pullback into here, so your bias was to the downside, you say to yourself, okay, price is going to drop. I don't want to take a trade here because you're going to be sitting in a loss for quite some time. So why don't I look for price to come to the daily pivot? I have a strong sense of market direction to the downside, so I'm willing to sell, put a sell order here. So that will be a pending order, because that could happen in the middle of the night when you're sleeping and you may not be at your desk. So instead of having to be up in the middle of the night to take that market order, what you can do is, instead of market order, you would just go to you would go to your pending order instead. So pending orders are for times or for levels that you're not watching at the time. So if you go back to our slides here, so you'll see that pending orders, we have two types of pending orders. There's limit order and there's a stop entry order. Limit orders are the easiest ones to understand, and we'll cover those first, and then we'll go into stop entry orders. Okay, so what are limit orders? Limit orders means you are buying below the market or you're selling above the market at a certain price. So sounds a little confusing, but stay with me here. So buy below the market, right? Or you're selling above the market. So let's take a look at that. So let's go to our charts here. So let's say you wanted to sell here. So this was a good level you thought you wanted to sell. So basically, we are selling above the market or we are buying below the market. So let's say you thought to yourself, you're doing your analysis on the chart here, you see that price is right in the middle, not likely a good place to take a trade. So you want to, let's say you think to yourself, maybe price will do this, right? It will give us a double top and you want to take a trade right there because that's the best entry. After the double top, you see that these pins and you say there's no way price is going to go higher, or if it does, it will likely go to this level here and then drop from there. So that's the best place you want to take a trade because your stop will be the smallest over there. If you place your trade over here, then you're sitting in this loss and you're fretting this whole time, and your stop is much bigger now because you have to account for this level here. So best thing to do in that case is to identify a level, or let's say you wanted to place a trade at pivot point because you expect the price to pull back into the pivot point and then drop. So if you wanted to place a trade right here, for prices here at the moment, you need to wait for the price to go here. You don't have time. This is when we use the pending orders, right? So you would go to the same thing. You would do new order. So instead of type instant execution here, you will click on it and you will go to pending order. So this is our pending order. So in the pending order, there are multiple different types. You will see buy limit, sell limit, buy stop, and sell stop. So first, we're going to look at our buy limit and sell limit. So buy limit and sell limit means when you go to, let's take a look at buy limit first, right? Buy limit means that you tell it at what price you want to buy. So buy limit will generally be below the current market price. So right now the price is at 1.19487. So let's say we want to buy here, which is 1.1915. So you would put that in there, 1.1915. So now it also gives you an expiry, but expiries usually I don't check that. I just leave it in, and you can manually close that order out. So expiry is not as important, but you can check it and you can tell it how long is the order valid, because after a certain point you may not want to enter the order. So that's why you want to use expiry here. So buy limit, you click on, so let's say you want to buy. When price comes down here, you think that it's going to do a double bottom. So you think price is going to do one of these, double bottom, and you think this will be a perfect opportunity to buy. Same thing that happened with our euro dollar here. So let's take a look at euro yen, sorry, my apologies. So euro yen and pound yen. See how price went. So looking at yesterday's move, see how price came down. And then if you take a look at a 5-minute chart, you will see there was a double bottom. So here's your double bottom, right? So price comes down here. And so let's say you want to place your order just above here. So you would know. So what you would do is you would go new order, and you will say instead of instant execution, you say pending order, and then you say buy limit. So let's say you wanted to place an order there. So the price there is 130.32. So you would say buy limit 130.32, and you click on place. So now it says you have a buy limit. It was successful, but as you can see, there's no actual trade in. So if you take a look at our terminal, where's the view terminal? So if you take a look at our terminal, you will see that there's a pending order. So it's not up top, it will be underneath here. It will say buy limit, euro yen, and it will give you the price. So the reason it was green was our actual price is very close here to being entered. So if we go all the way back, this is where we put our buy limit, but we are operating in the back here. So when it's close to being taken in, it will actually make it green. At least in my platform, it will make it green, and it will tell you that you're within 10 pips of price getting picked up. But this is what it will say as a pending order. It will say the size, the type of order. So we had a buy order, so it will say buy limit, size, the symbol, the currency that we are putting an order in. It will say the price that we want to execute that order, and you can put your stop loss and take profit targets right at the same time as well. And then it will give you what the current price is. At this point, the price is at 130.42, and we are waiting 10 pips. So once it's within 10 pips, it will turn it green saying it's about to get executed. So this is what the buy limit looks like. And you can always, let's say price has gone away and now your technical analysis has changed because things have changed. You can always go in here and click on this X that will delete your order. So once you do that, it will bring it up, and then you just go modify order and you click on delete. And as you can see, there's no order left here anymore. So that's your buy limit. So let's say you wanted to now sell. So we talked about, let's go back to our euro dollar here. So we're looking at how if price goes all the way up here, so let's move this higher. So if price goes all the way up here, you expect price to give you a double top or some sort of a rejection pattern, because you're thinking once price goes to this support resistance level, it's a very strong level, chances are it's going to drop from there. So what you would do in that case is you would go and place what's called a sell limit. So you would have a pending order and you would say sell limit, right? So you tell it what price you want to place that order at. So this one is 1.1988. So let's say 1.1990 just to make it even, but you can place it at any price here. So 1.1990. So that's the order. That's the place you want to place the order at. So you would do that and then click on place. So this is your sell limit. And now, so it will give you confirmation that it has been set. And if you go see, so this is the green line that will appear in your MT4. Other platforms may do something different, but it will tell you that's the order number, what type of order it is. It's a sell limit order. So this is a pending order, and for how much, what the size is. And if we take a look at our terminal down here, again, we have the same information. We have the order number, the date and time, sell limit. So this is a pending order, size, symbol, what currency we're taking the trade in, and the price that we are putting the order in. And of course, you can put your stop loss and take profit, which I highly recommend to do. So you can put your stop loss and take profits in there, and then it will give you the current price. This is where the price that currently is, right? So sell orders, we will generally place above the current market price, and buy limit orders, pending orders, will place below our current market price. So if we go back to our session here, our PowerPoint, we will see limit order, limit entry order, buy is below the market and sell is above the market. So this is exactly what we did here. Our buy was below the market, and you can have multiple orders going. So you can say pending order, buy limit, and let's say if it price goes into the bottom, so into 1.1915, you want to buy. And then here we go. So you have a pending, and this is where you would put your stop. So let's say you wanted your stop, 1.1885 was your stop, and let's say you wanted it to go up, and 1.1975 was your take profit. You can enter that right there, and now it will give you the confirmation. And you can have, so you can have multiple buy and sell limit orders, pending orders, but nothing will happen. You're not in the market. And as you can see, the profit and loss is zero because we're not in the market. Price will only get executed when we go there. So if we actually move our, I'm trying to move the support resistance line out of the way here. So if you were to move support resistance line, here you see that, actually let's change our buy limit order so that we can actually see it. So let's make it 20. So 1.1920, this is how you would modify your order. So here's our buy order. So we have a buy order, below the market, a sell order above the market. And you can, as I said, you can have multiple orders in, and if you have entered your take profit and stop loss, those will appear as red lines here. But you're not in the market currently. You're just waiting. You have an order all positioned, and it will get triggered whenever the price gets here. So it gives you the freedom to be away from your computer, so you don't have to sit and stare at the chart. So those are your buy and sell limit orders. So just going back to our PowerPoint here, pending orders will have two types, or two main types. There's limit orders and stop orders. We are currently looking at limit orders. Within limit orders, you'll have a buy order or the sell order. Buy order will be below the current market price. Sell will be above the current market price. So those are buy and sells. It frees up your time, so you don't have to be in front of the computer. And this is where you can identify support and resistance levels and take your trades around those levels. Now, the second type of pending orders are called stop entry orders, right? So stop entry orders are the opposite of this. And these are the orders that we don't use a lot. I don't use a lot of them, but they're good. They're good orders to use. Now, most people have trouble wrapping their minds around the stop entry order, so I will explain these in a little bit more detail here. So stop entry order means you are buying. So here, with the pending order, limit order, we buy below the market, but with the stop entry order, we are buying above the market, or we are selling below the market. So it's the opposite of this. Now, how does this work? So let's go on to the charts and we'll take a look again. Okay, so here what we're trying to do is, if price comes into the bottom here, gives us at this level, we expect the price to push back up, so we'll want to buy. And if price goes above the high here all the way into the top, we expect it to drop, so we want to sell. So we have a sell limit up top and a buy limit up top. Now, what is a sell stop order? A sell stop order basically means, so this is our analysis, right? Those are the two key levels that we have identified, and we are wanting to trade from those orders or those places. So now let's say this is the range that the price has been trading in for a long time. And actually, let's go to a range bound chart that we have. Dollar CAD is a good current example of that. We have a range bound market. If we go to a 1 hour chart, this is a perfect range bound market. As we can see, price has just been trading in this range for a while, for the entire week, actually, a little bit over a week. Every time price goes into the high here, it drops, it goes into the bottom, it drops, right? So one, you can trade this as a range bound market. So you sell at the high every time price goes into this level. You put your stop a little bit above here, so you don't get triggered here, and it will, take you in. You can put your buy limit order at this S1 level, and it will take you in as the price goes up, right? Now, in order to trade breakouts, this is when you would use your stop entry orders. So in the stop entry orders, as our, sorry, let me just go back. In the stop entry order, so we are buying above the market, not at the current price. So you would say, why do you want to buy at a higher price? I will explain in just a second. Or you're selling below the market. So generally, the better price to sell is the current price, because if it drops, then you've lost 50 pips, or you have not taken advantage of that, and now price is getting closer to your target, right? Not in this case. So this is for trading breakouts. So this is very good for trading breakouts. So in this type of a thing, what we're looking for is, we're looking for price to go above. So let's say you thought to yourself, you're not interested in trading the range, or you have been trading the range, but now you're thinking to yourself, well, if the price gets over here, so let's go back to a higher time frame so we can see this better. So you're saying to yourself, let's say, what's the outer limit here? So this is the high and this is the low, right? This is our range. So now you think to yourself, okay, if the price goes above this level here, so let's say goes above 30 pips above this level, chances are it's going to go higher. And this is what so when a lot of times when we are doing our market analysis in the trade room, I will say to you, or sometimes when we have such market conditions, I will say to you, in order to take a breakout, we need the price to break out, pull back, and you want to take a trade above that, not on the breakout, but the next level, right? So what you would do is we identify how much we think that the breakout could be, and then we put a stop. So let's say 50 pips above that, and we think it's going to go over here, right? So even if you give up 50 pips here, you have all this time, right? So you have 200 pips still left in the trade. So in this case, let's measure it out. So you enter the order here, goes all the way up to, so it's about 138 pips. So even if you give up your 50 pips, you still have 138 pips of profit in this. So what you would do, this is where the stop orders come in handy. So this is when you would put your stop order. So you would go new order, go to pending order, and instead of buy limit, you would say buy stop. So we are only interested in buying above the market, right? So once price is broken out and it's holding above, that's when we want to buy it. So we would say buy stop, right? So that's the buy stop order. We will give it the price that we want to go in at, and our price is 1.2980. So 1.29, let's say 85 here. That's the place that we want to place our order in. And in this case, our stop would be in here, or even on the other side of the range, because price can come back into the range and just test the range one more time. So let's say 1.2780 here. And these are not just, I'm just using these prices for example. And our take profit target is 1.3100. So let's say that's the order we want to place. So what we're saying here is price is trading in a range. I'm only interested in taking this trade if the price breaks out of the range, because then I expect the price to continue. And that's when we'll do the buy stop order. So we'll go up, pull back. Sorry, it won't pull back. We just put an enter an order here. If you were looking at the market, you were staring at your charts, you were at your computer at that time, then you would do that. You would wait for price to break out, do a pullback, and then engage in the price. And likely you would be able to enter at a better price. But what we are trying to do is we're trying to not get faked out, because we don't want to do one of these and takes our order and then goes in the opposite direction. So we don't want to fake out. So we have to give it enough room above our top level here, our resistance level, and then we buy, because then we think to ourselves, if price goes to this level, there's no way it's coming back, it's going to continue, right? So we do it, so you can say 30 pips or 50 pips above the resistance here, that allows for those stops. So sometimes price will just go get the stops and then come back, right? So it keeps you from getting faked out in the trade. So this is why we have to put it above our resistance level, allow enough room for all the other stops that are accumulated here. So that's what we'll do. So we'll buy here. So we are buying above the current market price, and we are going to take our profit all the way up here because we are expecting price to continue. So this is how we'll say pending order, buy stop, the price that we want to be at, which is 1.2985. Our stop loss, which is on the other side here, and you can choose wherever you want. Like, it doesn't have to be all the way on the other side. You can just be in the middle or on the other side of this support resistance level. And then our take profit target, whatever your take profit target is, you would put that in there, and then you go place. And here we go, gives you confirmation. So right now our order is not placed, but if you see here, it will say buy stop, the size, and the place it's at. And here you can see we have a buy stop order, and we have price going, or date, order number, date and time, buy stop, the size, the pair that you want to take the order in, the price you want to go in, your stop loss, your take profit target, and the current price where it's at. So right now we're quite far away. So this is how you would set up your pending orders, and you would walk away. So let's say we weren't sure which way the price is going to drop or going to go, whether it's going to go up or it's going to drop. So what do? We can stack the orders on both sides. So this is called a straddle trade. A straddle trade is where you place orders on both sides of the target level here. So in this case, we have a range. So if you think to yourself, if the price goes above, chances are it's going to continue. If it drops below, chances are it's going to continue. There's all this room for you to basically for the price to run, right? And this is what happened in our Euro pound Aussie trade that we were looking at. So when we're looking at placing these orders, we always consider the spread, because spread will make a difference. So when you're putting your entry, just make sure you're accounting for spread as well. So that's a good point. So here, what we were looking at is we had this range here. And what we had looked at was if the price breaks above this range, then it was going to go higher. But if it broke below the range, chances are it would come all the way back down. First target would be over here. Second target would be here, right? So this is another good example of a range-bound market where price went up, stayed in this range, broke below the range, and then it's continuing on lower. And this is where you could have your sell order, and you will wait for price to go back, come down. So this is the one example that did happen. So that's why I just wanted to point it out. But now we'll go back to our dollar CAD, which is the current level. So how do you, in this case, place your, so let's say we have accounted for price breaking out to the upside. Now we also want to account for price breaking out to the downside, because if the price breaks out of this range, for example, so let's say price breaks out of this range, then we have all this opportunity, right, that price could come down to. So what are we going to do in this case? We will put a new order. We'll say type is pending order, and then we'll go to this here, sell stop. So basically, sell stop means we are selling below the current market price. So let's say we want to sell at, let's say we want to sell at 1.2740 level. And then our stop loss here, let's say, will be on other side here. So 1.2930 level. And our take profit target will be all the way 1.2555. And again, keep your spreads in view, because it will account for spreads. So click on play. So this is what we do. You can have an expiry. If you want it to expire after a certain point, you can just click on expiry. But this is how we would set up an order. We click on place. It will give us the confirmation. And so now we have a sell stop order for right down here. So in this case, if the price were to, so let's say price were to break below, it would do one of these, and then it will come down. So we expect it to do this, right? This is where our order gets triggered, our sell order. So we are in a sell trade here, short, and we go all the way here. And this is our profit target, and price will go all the way to our profit target here. So we move this out of the way. As you can see, that's our profit target. And if we go take a look at our terminal here, we will see we have a sell stop. So this is called a straddle trade. So basically, we have straddled the market on both sides. So we are jumping into a buy trade if the price breaks above our level here, our range. But we're doing a sell order if the price goes below our range, then it will sell it, and we're looking for it to go to the next level. If it breaks above, we buy, and we're looking for it to go to the next order. So here we have sell stop order for the size, the pair that we're trading in, the price that we entered it at right here, 1.2740. We have a stop loss in place, and we have take profit target in place, and this is the current price. So it will give you the current price, but as we can see, the profit and loss is 0 right now because we are actually not in the trade. when any of these orders will get executed, that's when we will see that price will do something. So that's how you will enter buy stop and sell stop orders. So just as an experiment, what we'll do is we will close these out. So these are the pending orders, the buy limit and sell limit. And let's just, and this is how you, so if you wanted to delete it, so let's say the thing is not valid, that analysis is not valid anymore, price has gone in the other direction. So what we'll do is, so right now, so we'll just close this out by limit order here. So it's actually about to get triggered. So actually this is a good experiment. So let's take a look here. So right now we are fairly close to this buy limit order that we had set up at 1.1920 level. It's at 27. And so this is how it will get triggered. So we're just going to watch it for a few minutes, see if it gets taken in. So you would just have it there. And we are looking for price to just kind of go back down. This is a good setup though. This is a tweezer top trade setup, just to kind of point it out while we are watching here. So this is what will happen. Price comes down, it will grab the order. So we will be on the buy side and we're looking for price to go up. So this is the buy order. Looks like it's going to take some time. Okay, so let's see if it will do it. Okay, it's taking its sweet time, so don't worry about it. This is just an exercise, so we'll just delete it. What we will keep in place would be our straddle order. So we just delete this one because we don't care about it. And as you can see, those two, the ones that you close out, they are gone. So those orders are not in place anymore. And we have buy stop and sell stop. So to our point in the chat here, they will, the buy orders always get triggered at ask price and the sell limits will get triggered at bid price. But I don't want to confuse you guys too much. That's the spread that we are talking about. It's always that, whether whichever orders you place. So keep that in account, which means you could have anywhere from 1 to 3 pips of price difference where it will get executed. But this is how you put pending orders. So just to recap here, let's go back to our orders here. Market orders, you're buying and selling at current market price, and pending orders, you are not buying at current price. You are looking at important support and resistance levels, that type of stuff. So you're looking to buy at a different price than the current market price. The benefit of putting pending orders is that it frees up your time and you don't have to be in front of your screen. You can just set your orders and you can walk away. So orders will get triggered. So you do your analysis, place the orders, they will get triggered when the price gets there, and they will go where they need to go. So that's the pending orders. Within the pending orders, there are 2 main types. There's limit orders, where stop entry orders. So limit orders, we were going to buy below the market and we are selling above the market. So going back to our charts here, so let's say we wanted to buy here, we would place a buy limit order. So in the type, we will go pending order and we say buy limit order, and we'll place our 1.1915, and you can put your stop and take profit target, and we'll place this, and you will see there will be an order right here. Actually, I'm just going to change it a little bit so we can actually see it. So here's our limit order. So it hasn't taken us in, so profit and loss is 0. It's very close to the price. It doesn't have to be that close. You can put it wherever you like. So this is our buy order. Once price gets to this place, it will take us in, and then we'll be in the buy position. So in a buy limit order, it will give you the order number, date and time, buy limit. That's our pending order. We're going to buy, we're going to go long, what the size is, the pair, the price, and then your stop loss and take profit targets and the current price that it's at. So that's a buy order. And now, so we are in the buy limit order, we are always buying below the market price and we are selling above the market price. So if we think to ourselves, the price is going to come to this level and then we are interested in selling it, so we would put a pending low order and we'll say sell limit order, and we will put it at 1.1990, and then you can have your stop and take profit targets and click place, and it will place an order there. So now you will see a buy sell order as well. So if price goes to that level, it will sell. If it goes to this level, it will buy, and those orders are positioned here. And the difference with our other orders, our stop orders, are that stop orders are usually when you're buying above the market or you're selling below the market. Generally, we can use those for breakout trades. That's the best way to use these orders for. So going back to our charts here, we were looking at dollar CAD trade. This is current market conditions here. So we have an order. Price has been trading within this range. We take a look. Price has been trading in this range for a long time here, many days. And at some point, it's going to break out of the range. And either the price will break out of the range to the upside, and then it will go to the next support and resistance, or it will break below the range, and then it will go to the next support and resistance level. So in this case, we can have a buy stop order above our current price, and we can have a sell stop order below our current market price. So to place that order, you would go new order, type will be pending order, and type here under pending order will be sell buy stop, because you're buying above the market. So you go and you can put your price in. So let's say 1.2945 level. Let's say you place an order, and you can have your stop loss and take profit target. You'll click on place, and then that order will be back down here. So it will give you a new order. You will have a buy stop order, and it will give you how much, the size, the pair, the price, stop and loss, and then current price it's at. And then if you want to sell below the current price, we'll go pending order, type sell stop, and here we will give it let's say 1.2760 will be the place we want to place the order. You can enter your stop loss and take profit targets it, click on place, it will give you confirmation. And if you come down here, it will give you the sell stop. So you can have multiple orders in. There's no restriction around how many you can have, but it's better not to go crazy. So this is how you would place it. So right now we will run this experiment. So we'll close it because we don't want too many. So I'm going to close these last two that I entered. So right now we will close the buy limit orders as well that we just created, because don't care about those right now. Okay, so we'll run this experiment. So we are in a range-bound market. So we have two orders. We have a buy stop above the range. We have sell stop below the range. We have stop loss, take profit targets for both of them. And let's see if they will play out. So over the next little while, we will monitor it and we'll come back. I'm going to leave the orders in, and I will come back and do a follow-up on this to see if they get triggered and where the price goes. So this will be an experiment on how the price will react at these levels. All the orders are set, and we'll see how it goes. But I hope that clarifies how to place these orders, what the different types of orders are in pending orders, and the difference between market versus pending orders. Any questions? Okay, so no questions. I would say give this a try in your demo account. Play around with it, test it in your demo account, see how you go, how it goes, see if you can get comfortable with these orders. They are good. They're good. I really like having pending orders, and they can be quite useful, especially if you're not able to be in front of your screen. So you can just do your analysis, and you can free up some time and place some pending orders. All right, so we will call it a wrap here. You guys have a wonderful weekend, and I will see you on Sunday for our weekly market analysis.
Hi friends, a lot of people have been asking about my trade room service. So currently I am not offering the service anymore, or actually I had stopped offering the service because I am building up a different set of services. I am changing the business a little bit and therefore making some shifts in the business. So I had closed off the trade room till we come up with this a new concept. However, it has been taking some time. So I think I'm still a few weeks away from introducing that service. But in the meantime, a lot of people have been asking me about the trade room service and they're interested in joining the trade room. So I just wanted to open up the trade room for just 1 week here for all of those who missed joining the trade room earlier or want to jump on this opportunity now. This is a good time to do it. Going forward, the prices will be changing on this and the type of service that I'll be offering will be changing as well. So we'll be at a slightly higher price point, but also it will be a different type of service as well. However, everybody who is in the trade room currently, they get grandfathered in, so you will get the same access, but at a lower price point. So if you are interested in joining the trade room, what you get as part of the trade room is a weekly market analysis that we do on Sunday. And then you also get access to my private Skype group where I share my trade ideas and commentary on what's going on day-to-day basis. I answer questions and you can show me a charts and I share my charts and things like that. And I also share my trade alerts. So any live trades that I am taking, when I take them, I will put that in the Skype room as well as in the Twitter group here, where I will tell you exactly the level that I'm getting in at, where my stop loss and profit targets are. All of those I will post as I take the calls. And then we also do a daily market analysis call every evening where I cover over 20 different pairs. And in each pair, we take a look at what direction I'm expecting the market to go and where I am expecting for it to pull back to, where the good level would be for it to enter, where it would be the best level to enter the trade, where the target would be. So you have a choice of not just the trades that I take, but you can also take a look at this market analysis and choose any trades based on those analyses as well. And every Friday I do a members only webinar where we cover different educational topics. And as a bonus, you will also get my pivot point indicator. This is one of the few indicators that I use. So if you're interested in using the pivot point indicator, you will get that as well. The cost for this service is $97 per month, and this is a month-to-month subscription, so you're free to cancel this at any point that you choose. You have full control over your subscription. And if you would like to sign up for this, please visit the link given here. It's a bit.ly link, TWV Trade Room. Trading with Venus, a trade room. And the cost for this service is going to go up. Like I said, I'm making some changes. They are a few weeks away, so it will take me some time to get that all together. But in the meantime, if you are interested in joining the trade room, this is a good opportunity to do so, because after this, I will be closing the trade room again till I am ready to offer the new service. So this option is available only for the next week. So if you are interested in joining, please feel free to do so. And I would love to have you in the trade room and work with you personally. So that's it for now. Have a great trading week and I'll see you next time.